Hello and welcome back to Only Pay. We'll be discussing about operations of universal life insurance. Be sure to watch all the way to the end. If you are new to the channel, then hit the subscribe button below from our life-changing content. Universal life insurance is just one of several types of life insurance policy available through life insurance company. Today, unlike term life insurance or mortgage reducing life insurance, universal life insurance gives your insurance policy a cash value, allowing you to withdraw funds accumulated on your universal policies. As and when needed, this flexible approach to life insurance is very popular in the US and offers a real alternative to standard term and mortgage life policies, where the policyholder does not normally get in benefit directly from the life insurance funds unless they are diagnosed as being terminally ill. Universal life insurance also provides policyholders with the ability to accrue interest on their life insurance premiums, something that a standard life insurance policy does not offer. How universal life insurance works? Universal life insurance works in a similar way to a high interest long notice deposit account. When an insurance premium payment is sent to the life company, the company deposits the fund into an interest account after deducting normal expenses charged per deposit. The funds then gain interest, with interest accrued being credited to the account on a monthly basis. Each premium payment made, of course, increases the fund while compound interest is earned on an account. Month upon month, the cost of maintaining the insurance product or products purchased through the universal insurance scheme are also deducted from the universal account on a monthly basis. Should the insurance policy holder wish to withdraw funds from their universal life policy, then they can do so from the cash surrender. Value of life policy withdrawals are normally controlled and limited to set number per year. Depending upon the policy provider, there may also be cap on the amount of money that the universal life policyholder can withdraw and stipulation on a minimum amount of funds that should remain in the universal life account. It should go without saying that withdrawal from universal life insurance policy will reduce overall amount of funds available when the lump sum claims is made up of death or terminal illness diagnosis. It is therefore important to manage the universal life account to ensure that there is sufficient coverage for your family and dependents on event of your death. If you don't have the time to carefully manage the universal life product, then you may end up with the little to show for your life insurance premiums, and when the lump sum payout is triggered. Universal life insurance is a form of whole life insurance, but the premiums are more flexible and benefits and more adjustable. Some insurance experts suggest that only those individuals seeking life insurance coverage into their 70s or beyond should purchase universal life insurance. Before you decide whether or not a universal life insurance policy is right for you, to consider the following information. 1. Flexibility. Universal life insurance is more flexible than whole life insurance. You can choose the amount of coverage you need as well as adjust your coverage based on your changing insurance needs. To saving, universal life insurance has a tax deferred saving compound interest is earned at the insurance companies interest rates and credited to your account each month. 3 options. Universal life insurance policy offer a variety of options such as family coverage, such as adding a term life insurance rider for your spouse and children, waiver of monthly premiums due to disability, and guaranteed insurability for loans and withdrawals. You can take policy loan or make withdrawals from your universal life insurance cash surrender value. However, the amount of unpaid loans and withdrawals at the time of your death will be deducted from the cash benefit your beneficiary receives. The number of loans and withdrawals you can make each year may vary from company to company. So make sure to ask yourself, insurance agent, 5 changes you may be charged for making withdrawals or surrendering the account. Value of your universal life insurance. However, note that if you surrender, you will still get the full amount of account value minus the charges and unpaid loans. 6. Death benefits. Universal life insurance has tax-free death benefits and most life insurance companies offer more than one options for death benefits. You can choose a policy that allows your beneficiary to get the basis amount of life insurance, or one that provides the amount of life insurance plus the account value. If you enjoyed this video, don't forget to hit the like and subscribe, and be sure to turn on the bell notification so you don't miss any videos just like this one. If you enjoyed this video, please give us your thoughts in the comment below, and we'll see you in the next one. Thanks for watching.